Hey, welcome, Jake, to the Wealth Matters podcast. How are you doing today?
Great. How are you?
Good, thank you, Jake. I've known Jake for a while. He's my CPA and, of course, a friend as well who I reach out to when I want to discuss anything about the business, taxes, and a lot of other things. Jake, can you tell us about yourself?
Yeah, so I'm a CPA. I've been a CPA for the past 5 years. I have a private practice on my own, and I focus on real estate professionals and real estate investors because there's a lot of questions that comes up, especially regarding real estate. So I like to be able to add a lot of value to the real estate community by being a specialist or an expert to them as a community.
Jake, you just mentioned about real estate investor who I am as well, but you also said that real estate professional. And I think I want to focus on during this podcast on real estate professional, or we would refer them as REP during the podcast. So, what is a real estate professional? Is that a realtor or a broker, or who is a real estate professional?
Yeah, so in casual conversation, it can mean a number of different things. But when it comes to the IRS and looking at taxes, there's a very specific reason that you would want to become an REP or a real estate professional, as the IRS would set it up. And the main thing for that is the difference between active and passive losses or income on your taxes. So let me give you an example. If you are just so you're just getting started out and you have your first rental. So if you have your first rental property and you have a loss on it, most rental properties do have losses because of depreciation. You're probably going to want to offset your other income, right? Maybe you have a business or a job or some
Right.
wages, some W-2 stuff. You're probably going to want to offset that with the losses from your rental property. So unfortunately, we more than likely can't do that. And there's a whole bunch in there. I'm not I'm not going to bore everybody to death. If you want to the nuts and bolts of it, it's section 469.
Section 469. Okay, I'll
469.
put that in the show notes as well.
Yeah, yeah. So if you ever need help falling asleep at night, just go ahead and read through the so basically section 469 talks about this real estate professional and the difference between active and passive real estate, right? So like in the example that I gave, this is your first rental property and you've got other stuff going on, other income coming in, you're going to want to offset that. But the IRS basically says, no, you can't do that because you're not actively participating in it. And a lot of people
Oh,
say, "Well, I am actively participating. The dishwasher broke, and I decided the new dishwasher to get, and the tenant had a problem, so I needed to paint it, and I went and painted it." Well, the IRS, they understand that, but at the same time, they don't actually qualify that as active participation. There's not enough in it to qualify that as active to offset your other income. So
oh,
that's really where a lot of this comes into play, and where it's really important, especially for new investors, to understand, what is active and what is passive. So basically, when we're looking at this, we want to figure out how we can get either these passive losses as active, or we got to look at other things that can create passive income that would offset this passive loss that we're having from the rental properties.
so when I'm working full time, that's my active income, right?
Exactly right. So the IRS, when they're looking at a real estate professional or this REP, there's two tests that you have to meet. One of them is the more than one half of the personal services that you perform in all trades or businesses for the tax year must be performed at real property trades or business in which you materially participate. So basically, you have to spend more time on real estate in activities and investing and stuff like that than non-real estate activities to prove that you're earning your living in the real estate world. So this would be the best example for this is someone that's a real estate broker or real estate developer that's spending a lot of time doing construction or other real estate deals and other real estate activities and other real estate type activities. They're going to be looked at as a real estate professional. Whereas if you're doing technology, or you have another type of job like accounting or technology or a doctor, you're not going to be able to qualify for this REP because your income and your time is spent doing other things. The second test on this is that you must perform more than 750 hours of services during the tax year in real property trades or businesses which you materially participate. So this minimum hour requirement prevents someone that's maybe retired or someone that's got a second job or a main job who may spend anywhere from like 200, 300, 400 hours managing a rental property. It would disqualify from someone like that would want to try to do that. So a lot of times people will ask me, okay, well, what if my wife gets or my spouse gets a real estate agent license? Just by having the real estate license, does that qualify them as a real estate professional? And the answer is no. They still have to be actively engaged at least 750 hours, which is a little bit less than part-time, if you will. But they still have to be actively engaged in the combination of your rental properties and being an active real estate agent.
I see. So I understood about active and passive losses a little bit, but I just want to backtrack and talk about the passive losses and why, because I think some of the listeners would be worried listening to this, that, any rental activity you may have or property, you would have passive losses. So just to bring that up, because the passive losses are there because of depreciation, and depreciation is it's an advantage we have as real estate investors, right? But most of the time you are still collecting your cash flow, and because of the depreciation, you are able to pretty much reduce or write off the entire cash flow, and you would be in negative for that year. Now you will have tons of passive losses every year, or not tons of, depending on how many properties you have. But then you want to take advantage of those passive losses by applying those to your active income, if there is a way, or otherwise passive income. And I think what I'm understanding, Jake, is that becoming a real estate professional or designating yourself as an REP would allow me to move those passive losses into active losses, and then in turn, which will help me write off my active income against active, those losses, right?
That's exactly right. So once you're a real estate professional, and you're qualifying as this is your active business, you're actively participating in real estate, then that becomes, and the IRS triggers that for active participation. And then that's going to be able to offset other active income that you have, as opposed to being considered passive.
So this is pretty good. This is really good.
Yeah.
Why wouldn't everyone want to become a real estate professional?
Well, that really depends on you and your personality and your experience and the services you can provide and your goals. So some people that maybe have went to medical school for 10 years, they don't want to switch over to real estate professional. They want to continue doing medicine and being a doctor and are focusing on biotech. People in the technology field, they understand that they can make a lot more money or have a much bigger impact, or they feel more fulfilled staying in the technology field and contributing more to technology as opposed to going into real estate. So maybe they still want to, they understand the wealth building ability of the real estate, but at the same time, they don't want to make that their number one primary active income source.
I see.
Right. So it really depends on you and your personality, and really what your goals are and what you want to achieve. And there have been a couple court cases where people have tried to challenge, or the IRS has challenged them under audit, and they've tried to come back in tax court where they say, no, I have equal participation. I'm working, let's say 1,600 hours on a job, or I'm self-employed for 1,600 hours, and I also spend 1,600 hours doing real estate activities. And those court cases are heavily litigated, but it all comes down to having the right records and keeping track of all the hours. And I don't know about you, but I don't keep track of 3,000 hours, or
Yeah,
how
I'm
I
not able to.
yeah, yeah,
It's
how I
hard.
spent 3,000 hours last year. It just, most people don't do that. So that's the biggest problem that comes in tax court cases, is that people aren't spending the time recording all of those hours and all the travel, especially between those locations.
Oh,
So
so let's say if I'm going from location A to location B, so from my one property to another property, does that time count as well?
it does. It does. Yeah.
Oh, okay.
Yeah. And it's also important to know that, especially if you have property out of state, right? So let's say you have something in Alabama or
Yeah.
Florida, that whole time that you're gone, and even traveling from your home to the airport, waiting in line at the
Right.
airport, the TSA and waiting for the flight and all that stuff, that all counts
Oh,
as time spent as well.
that's good to know. I did not know that.
Yeah, yeah. The only thing is you don't want to abuse this. If you
No.
have if you have a rental in Orlando and you spend a couple of days,
Yeah.
in Disney World with the kids, you don't want to
No.
count all that time you spent,
Yeah,
in Disney World.
I already started thinking about that. So, uh, you also mentioned about can my spouse turn as realtor and be an REP if she's not doing anything else? And I know you mentioned that's a no. Uh, but if someone is working a full-time job, can he or she show as REP? I don't think so either. Right? The same way as you said that you got to be able to spend more than half of your time on real estate activities.
That's right. That's right. And most full-time jobs require at least 1,900 hours. About 2,000 hours is the going
Yeah.
rate for a full-time job. So if you've done 2,000 hours, that it's very, very difficult to say that you are also a real estate professional. So it has not happened officially in a tax court case yet, where the IRS has approved that.
So let's say I have my S Corp and I'm an employee of my own S Corporation. So I'm the only employee and my wife has a full-time job as well. Uh, can she or I be a real estate professional, or can we combine our hours and be a real estate professional?
So you would not be able to combine your hours. It has to be for one person.
Oh,
And in your case, by being self-employed, it allows you more flexibility than opposed to having a full-time job. Because you can say that you can dictate how many hours that you're spending as an employee, or how many hours you're spending in that business.
right.
But like I said, for the most part, the IRS is going to look to see that you have other self-employment activities that are non-real estate related, and they're going to be very interested in your other activities and how much time you spent, and it's going to be very difficult to keep track of all those hours.
So
And
yeah, so this leads to the same thing though, right? And you and I have been chatting for a year now about a lot of other activities too on the tech side. And every time you mention having proper documentation is the key, right? For anything, be it home office, be it something else. So I think even in this case, REP, you got to log your hours. You got to have solid documentation to prove that yes, you work this many hours.
right, yeah, yeah, the documentation is key. And then the other thing that's really great too is using a travel location or trip tracking app. One of the ones that I recommend is Mile IQ,
Mile.
MILEIQ. Mile IQ is great for tracking your driving and your distance and those kind of things. So yeah, if you're considering qualifying as a real estate professional and you feel like you might be on the fence, you definitely want to use a mileage tracking app, because that's not only going to track the travel that you're doing and where you're going, but also the time that it happened as well, because it's all on your phone.
I see.
Yeah.
So does this mean every realtor could be an REP if they are not doing any other full time job, and if they are just in realtor, they are a real estate agent?
Not necessarily, because just having the license doesn't mean that you're a real estate professional according to the IRS, right? I mean, if in casual conversation, we might say real estate professional, and you might say, oh, well, you're talking about a real estate agent or a broker. in casual conversation, yes, but when it comes to IRS, they're very specific on these number of hours, right? So even though you have your real estate license, or even though you're a real estate broker, you still have to be able to show that you're spending the hours doing the activities.
Oh,
Because you could have a real estate agent license and just do one or two houses for friends or family throughout the year, and that wouldn't give you the 750 hours that you need. So you really have to treat it like at least a part-time job.
So let's say a real estate agent who is a full-time employee, or even if it's not a real estate agent, someone who is a full-time employee in a brokerage firm or a real estate development company, can they say that, oh, because I spent 2,000 hours in my full-time job, I'm a real estate professional?
Well, it would depend on what the job was. If the job is specifically for real estate, right? So if they're involved in construction or investment or finding land to develop, or working in kind of real estate development, that would all count as real estate hours as far as what was qualified. But it really depends, right? So if it's someone that does admin and bookkeeping at a brokerage firm, then that wouldn't count, because they're not really actively engaged in real estate, even though they work for a real estate company.
Oh, wow. So I think what this tells me is that even if you are a realtor, work for a real estate development company or a broker, you got to have a good CPA.
and track your hours, right? Yeah.
Oh yeah. Log everything, have proper documentation. But it's important to know all this, because you just mentioned about a court case, and I'm pretty much there would be tons of court cases just around REP.
Yeah, and one of the ones that I was following pretty closely was actually just recently here, just a couple months back. It was Connor versus Commissioner, which is last year in 2018. And one of the two things that they covered a lot in the court case was the dealer versus investor issue.
Okay.
So in that case with Connor versus Commissioner, the taxpayer was selling raw land. And did it generate an ordinary income or a loss because they were a dealer or an investor, right, or was it capital gain or loss because they were an investor? Looked really deeply into that as far as what they were actually doing, whether that was part of their active participation in active business, or if it was kind of just something on the side that they were holding and waiting on. And then they also covered the real estate professional issue, when what was passive and what was non-passive, and what could he deduct and what couldn't they deduct. So I don't want to bore everybody going through all the specifics on it, but they really came down to, or the real takeaways from it were that you really have to do the 750 hours and a material participation, and document those hours.
Okay, so 750 hours are the key, and of course, participation as well.
Exactly right. And the IRS is going to challenge whatever they want to challenge. This particular the 469 that we're talking about here has been challenged more, if not the most, more than a lot of other court cases out there. And it's just, there's so much gray area with it, and it just seems like the IRS always wants to challenge it because they want to have these court cases cited in their best interest,
right?
And making sure that they have all the money coming into them. So unfortunately, a lot of these court cases don't come out in the side of the taxpayer. It usually cited to the IRS.
Oh,
yeah.
So even if, let's say, I have all the documentation and hours, there is still a good chance if I'm challenged, they will always find something out.
Yeah, I mean it's kind of tough. I mean they'll find what they want to find. There's been a couple court cases where someone had a really good log of hours, but they went so deep into the log of hours, they found one day that had more than 24 hours logged. Right.
Oh my God.
And little things like that can discredit the entire case.
Wow.
So yeah, so even if you keep really great records, there's always the chance of one little slip up here and there.
Right.
One thing that can happen. So
So that's why I think that Mile IQ app, or an app which allows you to log hours as well, would be some good, so that you don't try to go back a week after and figure out, oh, what did I do the week before, right?
right, right. And it's interesting you mentioned a week, because that's actually the IRS. They have a specific word for it. I can't remember what it is, but that's actually they want you to be doing record keeping at least weekly.
Weekly,
They
exactly.
don't want you to wait the entire year and say, oh, what did I do on
Yes.
January
Yeah.
January 3rd of this year? It's like,
That's exactly what I'm doing all the time.
yeah,
Even though I'm not an REP, but just trying to log my hours for my business and all, I'm trying to figure out, what did I do a couple months ago? Where was I?
yeah.
Yeah, it gets harder and harder.
Yeah, yeah, and that's something you want to do, especially for yourself and your self development goals, is to make sure that you're recapping the month and saying, hey, what did I do and what did I spend my time on and my resources on, and make sure that you're learning from that as well. But whether that's going to go back and track every single hour of every single day, a lot of us don't want to go through that kind of headache and hassle, and it's kind of monotonous trying to figure out every single hour.
It is hard and it's painful
Yeah.
when you try to figure out what has happened, right?
Yeah. So two things that I just want to mention on that, and we can dive into them a little bit deeper if you want. But the passive income versus the active income that I mentioned, there's a cool little trick that you can do if your income is less than $100,000 if you're married, or 50,000 if you're married separately. If you're what's referred as a modified adjusted gross income, or MAGI, that's the last line on the first page of your 1040.
Mm-hmm.
If that line is $100,000, basically if you make $100,000 or less and you're married, then you can actually write off $25,000 of income, rental property. I'm sorry, losses. You can write off
Wow.
$25,000 of rental property losses every year, and then that starts to phase out after $150,000.
This is why I'm not able to write this off, huh?
Yeah, you make too much money.
I wish. No, that's a good little trick, though.
Yeah, yeah. So if your CPA has ever told you that you make too much money, there's a lot of tax deductions that are based on this modified adjusted gross income, or this AGI component, and yeah, everything from child tax credit to to this rental property loss tax credit and deduction. There's a lot of things that they kind of get phased out as you make more and more money.
Right.
Yeah.
Hey, so last question, Jake, I have is, what are the steps to qualify as REP or designate myself as a REP? Do I need to follow certain steps or guidelines? How do I do that?
There's really nothing officially that needs to happen. There's no documentation or forms that you need to send in. It's really all about the documentation that you have and the records that you keep.
I see.
Yeah.
So yeah,
And
once you have all the records and documentation, then do you decide at the end of the year with your CPA that you want to designate yourself as REP in the tax returns, or should you be meeting with your CPA throughout the year and making sure you are on track?
Definitely. Yeah. If you're a real estate professional and you want to use the real estate professional, the REP on there, you need to be meeting with your CPA at least once throughout the year, because you need to be looking at making sure you're tracking your hours correctly, and then also grouping and assigning the properties and the activities together as well. Because there's a lot of, once we hit the 750 hours test, and we're comfortable with that, and we still want to take the REP, there's still a lot more that we need to do as far as looking at all these activities and how we're going to group the activities, what activities are passive and what are active. Like I mentioned in that Connor versus Commissioner case, the taxpayer was a real estate professional. He was a real estate developer, but he had lots of different things going on. And that's the same case with real estate agents and real estate developers and brokers. They might have rentals happening. They might have some land that they're holding on to for development. they might do some management or some consulting or other things like that on the side. So yeah, it's not just about keeping track of the 750 hours, but it really goes deeper into of all the activities you've been doing. How many hours do you spend on each specific activity?
So it's not as easy as it seems, because I attended a lot of tax workshops and or even some meetups, and they talk about, if you have 5-6 rental properties, just designate yourself as REP. It's pretty easy, and you can just write off the entire all your passive losses. But it seems it is not as easy as it sounds.
Yeah, well, that's the problem is when you get tax advice from someone that's not actually doing your taxes. They can kind of say whatever they want to say, and because they're not under audit. But yeah, that's the problem is you can really put whatever you want on your tax return. I mean, you can say that you made $1 million or you spent $1 million. You can put whatever you want on your taxes. But when it comes down to audit, if you get audited, they're going to want to see all the documentation and all the proof and everything behind it. So that's the biggest problem is that you really never know when you're going to get audited or what, checking a box on a tax return, if or not that box will get you audited.
So, yeah.
Yeah.
That's what I thought. So
yeah. And the biggest challenge with that is a lot of the real estate investors that we're going to be working with want to have that loss on a Schedule C, because the Schedule C will offset their other income. And that Schedule C form is the most highly audited form out of all the other tax forms. So yeah, basically just with, that the losses on the Schedule C or Schedule E, those losses are going to be more looked at more scrupulously than anything else, really.
So when you have a Schedule C, better be ready.
Exactly. You got to keep all your documents, everything like that too.
Exactly.
Yeah.
You need to have all your ducks in a row.
Yeah.
So cool. I think I don't have any other questions. Did you forget anything? Do you think we should add anything to real estate professional?
Yeah. I just want to kind of wrap up with this idea of a passive income generator, or a PIG. So we've been talking here about all this 750 hours and all the real estate professional things. And the thing is, I have a feeling that a lot of your listeners are just like, I don't want to do that, or I can't do that. I've got other things going on. I'm really into the biotech or technology or consulting, or I do other stuff. And there's just no way that me or my spouse are going to do the real estate professional. And that's totally okay. If you don't do anything like the real estate professional, you're just going to get passive losses, right? And your passive losses are not bad. They just stay passive. They just stay inside
until you sell the property.
Until you sell the property, right? Is that a bad thing? No, but the problem is there's really no short-term benefit to it.
Right.
So I want to throw this idea out there to your listeners: is this idea of a passive income generator, or a PIG. And this can be many different things. I know you might be having a guest talk about, or a separate podcast on oil and gas.
Yes.
Oil and gas and minerals and mining are great as passive income generators, because there's something that you can invest a small amount of money in, and you can have this passive income that's coming in. And this is great for offsetting your passive losses from your rental properties. You can have this other passive income, and they cancel each other out, and then you will have the benefit of more income, but it's tax-free, if you will.
And I'm glad that you brought up oil and gas. I'm planning to do a podcast on it. Another thing I have learned, and I may be wrong as well, you can call me out, but that, let's say if I invest just $10,000 in oil and gas, I can write off as much as 65% or 75% of that during the same year against my ordinary income.
Yeah, there's lots of different, I'm not going to go into the specifics of it, but there's lots of different tax deductions for oil and gas, and there's different rules for the IRS and tax rules about the exploration for oil and gas, or for natural gas. So there's lots of different things as far as what they're mining for, how they're mining for it, how they're exploring for it. And so, so a lot of these investments are really good for a tax deduction as well as passive income.
Passive income generator.
Yeah.
Oh, thank you for that tip. That was good.
Yeah. Yeah. So make sure that you're looking at the passive income generators with someone that's going to look at it in your best interest, through your eyes. A lot of
Right.
these are just sold by people that are going to be earning commission on the sale. So you definitely, want to make sure that you're looking out for your best interest, but also working with an expert that understands the tax benefits of using something like an oil gas for a pig, and making sure that it's going to help you the best when you're looking at other income that you have or other losses that you have, and looking at your whole tax position holistically, and not just one item specifically from the other. Because when you're looking at your taxes, it all comes down to one form at the end of the year anyway.
Right. Oh, this was great. So, Jake, how do people, my listeners, reach out to you?
Yeah, you can reach out to me. You can on my website. It's adamsabc.com. That's ADAMSABC.com. I've got a bunch of tax strategy tips, videos, other really cool stuff on there you can look at. And there's also a way that you can book a appointment with me, or just a phone call. If you have any questions on that, I'm more than happy to help out.
Thank you so much, Jake. This was great. And have a nice weekend.
Great. Thanks, you too.